Hello guys, welcome back to ESENtaxa. Andrea Papeto here. In this video we are going to talk about the LLC and how you can exploit those entities, those type of companies in Europe. If you're new in this channel, ESENtaxa talks about how to optimize your taxation if you want to relocate to a specific country in Europe, and we provide consultancy services to help you to understand how better structure your business, structure your personal situation in provision of certain relocation towards a specific country in Europe. We cover jurisdictions such as Belgium, Italy, Albania and Republic of San Marino in order to provide you also the accounting service with the local and our partner accountants. Now, in this video, I just want to talk about the LLC, which is one of the most common entity structure that we receive in our consultancies with our clients. So everybody wants to relocate into Europe, bringing with them the LLC. The LLC is undoubtedly the most easiest structure, easy from a bureaucratic point of view, entity that you can bring with you. What does it mean bring with you? You bring something when you change your tax residence, you as individual, because you most likely that you're watching this video, you are the only administrator and probably you own the majority of the share of this LLC. So when I say I bring my company, means I bring and attract with my tax residence in the new country also my LLC that I have abroad, most likely incorporated in one of the United States, United American states, one of the states, and in Delaware, Wyoming, etc., etc. Now, most of the clients are coming and are asking, how can I keep open this LLC while I'm living in Europe? While, for example, I'm moving to France, I'm moving to Belgium, I'm moving to Italy, I'm moving to Germany, but I want to keep my business with the LLC. Now, the best things to do here is to analyze the type of business. If you have a physical business, a real substantial business in the United States or in another country, the company abroad is perfectly legal. Of course, there are certain things that you should improve, and we provide a suggestion on this, but something that can be kept abroad without risking any requalification of your LLC in the new country of residence. That's perfectly fine. But one of the most important thing, the consequences, is that we have to analyze the treaty between the country in which the LLC is established and the country in which you moved, because basically the treaty could determine the new taxation that you will be subject when you receive dividends or when you simply withdraw money out of your LLC. Okay, so LLC in the first scenario, when the business abroad is genuine, is perfectly fine. But then the taxation could change based on the treaty. So also moving to a different jurisdiction requires the analysis of the treaty between the new country in which you're going to be tax resident and the LLC that is probably most likely set in the United States. First point. The second point is when you run a business fully online, completely, you are the place of effective management of this company, you are the director and you are the only shareholder. Classical example, the majority of the clients have this situation. And here, in most of the cases, you're supposed to close your LLC, except some exceptions, but a very few exceptions. Why you have to close the LLC? We always repeat this concept in several videos, because the local authority might catch your LLC abroad and requalify it as a local one. So after some years you got caught, you have to pay back all the taxes that you basically avoided, because that company at the eyes of the new tax authority is considered a local one. This is another point that needs to be absolutely discussed in the consultancy. So in the description below the video you have our consultancy services, and basically we help clients also to understand if the LLC can be kept open or not. We also provide an unlimited consultancy service, which means that if we discuss a specific tax planning, a specific tax strategy, we will be assisting you up to the real implementation. So we are going to contact all the person that might be needed, such as notary, accountant, every features that altogether they works in order to implement what we have discussed in consultants in the first place. description, all the details in the description below this video. Then there is a situation where you most likely you don't want to move to Europe. You're not tax resident in Europe, but you would like to explore your LLC to run a business in Europe. This is also another scenario. And this is a quite interesting one, because here we have to take into account two situations, the most common ones. The first situation, I use my LLC to purchase directly properties or other company shares, or I use my LLC to be owner of another holding company in Europe, which will hold afterwards multiple operative companies or multiple properties or assets, etc., etc. Well, here also it's an evaluation that needs to be done at the level of the tax treaty, and mostly because in Europe there is this famous tax regime which is called parent subsidiary tax regime, where when we have two companies, one is the child company, one is the parent one, and most likely the child's company, children companies, they're operative, and the top one, the holding, is the one that just holds the share. When we have the structure in Europe, in most of the jurisdictions, the dividend is 0%. So when the holding take the dividend out of the operative companies, you don't pay any taxes. Instead, if you use your foreign LLC as a holding, this doesn't work. You cannot apply the subsidy parent tax regime, which gives you a dividend of 0%. But you have to rely on the tax treaty. For each operative company that your LLC in the United States is holding, you have to check one by one which is the withholding tax that probably is the reduced withholding tax, but there is still a withholding tax to be paid whenever you want to withdraw dividend out of your operative company. So in most of the cases, probably, even though it's a multi-layer structure situation, which could be more expensive, but it's to be evaluated if you have to hold your operatives companies or simply your assets with your LLC abroad, or you have to put in the middle another holding company which exploit the 0% parent subsidiary tax regime. And then between the holding in Europe, the European holding, and the holding in the LLC holding, we have to check in which jurisdiction to set up the European holding, because then we have to have the correct tax treatment to have also zero in withdrawing dividend towards your LLC. So the scenario is this one: LLC, European Union holding, and then the operatives. Okay, so this could be a situation which makes sense if you have multiple business with a big structure, with a certain number, with certain invoices, a certain revenue. But for smaller business, probably makes more sense to have a foreign LLC straight that owns one single business in Europe, especially if the tax treaty makes sense, if the tax treaty gives you a nice withholding tax or very reduced withholding tax, such as 5% or even 0%. And there are certain jurisdictions in Europe in which this is fine. For example, just to give you an example, you want to run an Airbnb in Italy, but you want to use your LLC abroad. Now, if you use your LLC directly, you have to basically establish a branch in Italy. So you have to basically, part of your LLC that makes all the business in Italy must be registered as an Italian one. So another possibility could be create an Italian SRL, which is it's held by an LLC in the United States, and this makes more sense in certain scenarios, in certain situations. I just depict some situations that could be useful for you, but I always says in every kind of video, each situation is a different structure. Every client has a specific designed and tailored situation that needs to be applied in order to reduce the taxation as much as possible, and also avoiding to make the wrong structure. And also, basically, one of the biggest mistakes that we need and we must avoid is that the famous requalification of a foreign company as a local one. So if we take all the correct measures, we can run your business from another country through your LLC, as I explained before, or if you want to, you as an individual, move to Europe, you might evaluate if you need to keep open your LLC abroad or simply close and open a local company. Okay? with all the consequences and all the tax strategy to reduce your taxation as much as possible. Now, the discussion of the LLC, it's quite complicated. I know it's a very nice entity, very nice juridical structure, but when it comes to run multiple businesses in certain jurisdictions, quite regulated jurisdictions such as the European one, it's time to get a consultation with an expert to understand exactly if the structure makes sense or not, okay? If you like this kind of content, if you want to be always updated with ESENtaxa, subscribe to the channel, notification bell, and like button to be always updated whenever we release this kind of content, and in the description below the video you have our calendar link if you want to book a consultation with us. See you to the next content. Bye.